So basically, what I have experienced in my last 6-7 years of the career, that the major problem that we all face is that we spend cash on the expenses, and after our expenses, we calculate how much our savings are. So we are not able to tackle our minds. We are not able to define a certain percentage of our savings, and that is something this step which should be a step one. And then we end up saying that, oh, the money is not there in the bank, or maybe we owe more than what we earned in that month. So these are the kind of problems we face. So the very first step to investing starts from setting up 3 different accounts. Like, we should not have single account for expenses and for investments and for the income. The first step to investing starts with putting 3 different accounts. One should be your income account, and from there you should start allocating your expense to the expense account. And then the third account should be your savings account. And there is one very basic funda, that your investment, the amount from your savings and investment account, should never move to your expense account. If you follow this mantra, I'm telling you, your savings will spiral up. Nobody can stop you. But once your investments, your savings start moving to your expense account, things start going haywire. And then these credit card companies and the banks who give loans, they make a lot of money out of those kind of situations. So how to segregate your expenses, savings, and emergency funds. So when I say you should have an expense account, you should keep aside you should keep aside a portion of your income as rent, the day-to-day expenses which you incur on food, veggies, clothes, the EMIs which you are supposed to pay. By EMIs, I am not talking about iPhone EMIs. I am talking about probably student loan, probably laptop loan. So those kind of small EMIs that we have created for ourselves, the food expenses, obviously the parties. You know, in my pre-MBA days, I always used to have a reserve set aside for my party space. Like, this is the amount I'm going to spend every weekend. Yeah. And then this is the expense account. At this stage, I would say expense account should make 30 to 50% of your monthly savings. And then I'll talk about the emergency fund. So apart from the expense account, when the money flows to the savings accounts, one should always prepare for any kind of emergencies, which can be in the form of the medical emergency, which can be in the form of suppose a wedding happens in the family, or there is a child's education which comes up in the picture. For all those things, we set aside emergency funds and the insurance policies. So we had floated this survey, but I would want to understand how many of you have already term insurance or medical insurance in place. I see one hand out of 21 participants. Very less, very less. Guys, we are pretty educated. We have access to so many resources. We have everything at our disposal. So in this situation, one should never underestimate the importance of a medical insurance and a term insurance. So, so we should never underestimate the how important an insurance is. And we should never rely on an employer health insurance. You know, I see a lot of people saying that, okay, we already have health insurance from our employer, so we don't need one. But when we go by our employer's insurance, the day we leave the company, our insurance is zero. Our health insurance is zero. And in these days, the health cost can go up to 20 lakhs, 30 lakhs, even in crores. So it is good to have health insurance in place. And when you have insurance with the same company over the years, you're renewing it, you get a lot of benefits in terms of there is top-up bonus, there is no claim bonus. Then because of your history, your premium also reduces. But if you start insurance, medical insurance at very late stage and without any history, the cost of premium goes up. Then the second important part of the insurance is the life insurance. So basically, when I talk about life insurance, there are 2 categories which we generally get to see. One is the plain vanilla term insurance, and one is the insurance which also has a annuity part where the person gets some kind of return. So if I give you an option of selecting an insurance, one which does not give you any benefit, it is just the benefit on the death that your family gets, or the insurance which gives you a short return, which insurance would you prefer? If someone tells you, you have to pay 1,000 per month every year for next probably 30 years, and you'll get a cover of 1 CR, or you pay 5,000 and you'll not just get cover of 1 CR, but you'll also get back 20 lakhs in return. What will you do? You'll go for 1,000 CR or 1,000 installment, or the 5,000 installment. So that is a very small part of the investment, and you should not expect return from the term insurance. Term insurance is supposed to give support to the family in case of an situation where the earning member of the family is no more. So we should go for term insurance keeping all those things in mind. And like there are options of having term insurance till the age of 60, 65, 70, even 100. So if you have option of selecting 3 insurance, 1,000 per month till the age of 60, 2,000 per month till the age of 70, 2,500 till the age of 100, what will you do? So basically, term insurance is for in the case the earning member of the family is no more, then family should get a support. But at the age of 60 or 65, do you see that your children or your family is dependent upon you? No, we don't see that happening. Once we attain the age of 60 or 65, our families are self-sufficient. They are not dependent upon us. So I think term insurance is good to have at max till the age of 70. There's no point in going till the age of paying extra money only to get it secure till the age of 100. It won't even make sense. Any questions on the topics covered till now? Yeah, Tharva.
Sorry, like just like kind of diversion, but I'm still confused, like with difference between health insurance and term insurance. Like both are
Okay.
all health-related reasons. So yeah, what's the main difference between them?
So health insurance, suppose I get detected with a disease which will incur which will lead to an which will lead me to incur around 5-10 lakhs of operation expense and the hospitalization expense. In the case of health insurance, I'll have to give my documents to the health insurer like HDFC or ICICI or Tata, like there are a lot of health insurers, and they will reimburse me. So that is for my financial stability. But term insurance, life insurance, is for the financial stability of my family in case I don't live anymore. If I die under any kind of circumstances, then my family, which is dependent upon my income, should not get impacted. So they will get some reimbursement from the insurance company.
Okay, so basically the term insurance is available only after death, not after any medical emergency.
Yeah, correct.
Okay.
There are few insurance which give benefits to the insurer in case the insurer is detected with some very high risk diseases, like something related to cancer or something. Those kind of top-ups are also available, but honestly I have not considered those top-ups myself, because there are a lot of terms and conditions associated with those top-ups. But yeah, you can always go for those where the person is not only reimbursed for the salary that they're going to lose upon, but they're also reimbursed for the expenses. So those kind of top-ups are also there with the health insurance.